The most profitable trades in your life that you are going to make are probably going to be continuation trades. Yet we've barely talked about them. Let's talk about them some more. And I know we've waited a long time to really kind of get into these, but there is a reason why, and it has everything to do with the final piece of your algorithm, the baseline. And as always, for those of you who have found this video or found my channel for the first time through this video, you've gone way too far. This is probably the very last video in the overall trading algorithm series. Now, there's still a lot of videos coming up after this one, but as far as putting together the algorithm completely to where you can now go back test it, this is the final piece. But for newcomers to the channel, I put a video down below in the description. It's the beginner's video, whether you're a beginning Forex trader or not. We do things completely different here, and it's a lot of fun and it's very effective. So go check that video out and it will tell you exactly how to navigate through this channel. But for the rest of us in this video, what we're going to do is talk about the rules for continuation trades. There are very specific rules here. Rules that go against almost everything we have talked about up until right now. There's a reason why I saved this for the very end. You're going to see exactly why that is. And then we're going to talk about how to trade them and give you some examples on my charts. So at any point in time, if there's anything confusing on the slides, just know we are definitely going to do some chart work soon. Now, I did mention that we have talked about continuation trades a little bit. Do you guys remember which video we did that in? Well, there's actually two, but the main one was the MACD video. I would describe how a continuation trade works on the MACD, but I think it's better just to go ahead and go to my charts and show you this part first, and then we'll come back. So this is the Aussie dollar 4-hour chart. This is just the first example I found that actually gave us a pretty good look at continuation trades. So with the MACD, you have your zero line right here, and the MACD can be a zero cross indicator, but it could also be a continuation indicator just on its own, because it's a two lines cross and a zero cross all in one. It's one of the rare indicators that actually does that. So in these cases right here, where the lines are already below zero and then they cross down again, that's what I'm talking about when I say continuation trade on the MACD. So it would have been right there is an entry. Technically right there would have been too, not a very good one. And then once that blue crosses back down below the red, so right there, and then again right there. Just as examples. The lines are already below, and when they cross back down, that is a continuation short. All right? What we are about to talk about here is going to follow that to a degree, but not quite. I just wanted to kind of refresh to kind of get it fresh in your head, but it's going to go through some changes once we start putting our actual algorithm up. So now that we've seen that, let's go back over the actual rules for these trades, and then we'll come back to the charts and put it all together. So just to review, in every trading situation, if your exit indicator, or sometimes if your confirmation indicator is really fast, your confirmation indicator might flip the other way, or your exit indicator might flip the opposite way you're trading. When this happens, you are done trading. You must close that trade out. Now, I've just gotten some questions recently, like in the last couple of weeks, from people saying, well, if I close out my trade and then price starts going my direction again, can I re-enter? No, not yet. You cannot. You're out of that trade until you get another signal to go that way. But you're not necessarily done. You might get another signal here sooner than you think. You might get a continuation trade. Now, continuation trades break a lot of the rules that we have already set. These hard, die-cast rules that I told you never to break, you can break a couple of them one time, and that one time is when you get continuation trades. So there's actually two, and let's talk about what those two are. So just last week in the pullbacks video, I said that if price has traveled more than 1 times the ATR of the pair beyond your baseline, then you are in a no trading zone. All right, that's one of the benefits your baseline gives you, is to avoid trades that have deviated too far from your baseline itself. But this rule does not apply to continuation trades. Sometimes you're going to get into continuation trades that are way past your baseline, and that's okay. So for this one instance, ignore this rule right here. All right? I'm going to give you another rule to ignore, and you guys are going to love this. For continuation trades, I want you to completely ignore your volume indicator. Volume indicators do not work here. I don't know what it is, but they just never seem to be on par with the movement of these continuation trades. I think you're going to get into a lot of these continuation trades off the backs of retracements and things like that. And during those retracements, volume tends to get smaller, and I think it just ends up screwing with your volume indicator to where it's just not ready to give you another entry. So when it comes to continuation trades, these two ironclad rules I gave you do not apply, but only here. Okay? Now, here are the rules we follow for continuation trades. Try to stay with me here. If it's hard, we're going to go to the charts, so don't worry about it. But price must have never crossed the other way on our baseline. All right? So if we are going short, and price had already crossed short, we entered a trade, and then we exited, continuation trades still going short can happen as long as at no point in time has the candle crossed and closed long over your baseline. Everything has to have remained short, just like I showed you on the MACD. On every example of those short continuation trades I just showed you on the MACD, those lines never crossed back above 0. All right, so you're going to see this in real time. And then money management is just the same as it always is. You still use your ATR here. You still use your risk profile. You just don't have the protection of that baseline anymore. And by now, a lot of you have probably gotten used to that, even though it's only about 3 weeks old. But those same principles still apply. You're just flying a little bit without a safety net when you take these. So just be careful. So it's really not that many rules, but they are pretty distinct rules, and you're going to see how this plays out when we go to our examples. So let's go there now. All right, so Aussie, Kiwi, Daily. Now we have our usual suspects. Again, we have the 20-day simple moving average, and I brought back Chaikin money flow. You can do this with a 0 cross indicator like this one, or a 2 lines cross, whatever you want to use. We're just going to use a 0 cross for this example. And so this is what it looks like. You had your initial entry going short right here. All right. Chaikin was below 0. Oh, no, wait. I'm wrong. You had it right here, so even better. Chaikin was just below 0, really close, but it was there. And this is where price closed and crossed downward. You would not have done it back here because your confirmation indicator did not agree, which is good. That would have been a small loss, but you avoided that. So on this candle here, you entered. And then if you didn't exit this trade right here or right here, it's really hard to tell when it's right on that 0. Let's take a look. Up just a little bit. So if you didn't exit right here, by the time your exit indicator crossed, your confirmation indicator crossed the other way, so you better have been out of that trade by then. But you got another chance. You got a chance to re-enter, because at no point in time did any of these candles cross and close back above your baseline. And then right here, this candle right here, we're below. Yes, we are. And once you entered right there, It got pretty good. This is a continuation trade. All right, so you guys see how it hits the criteria? You were already short. You had gotten out, but you're getting back in because price is still below your line, never crossed and closed above it, and your confirmation indicator just gave you another signal to go short. You're allowed to do that as long as it hits all of that criteria. And once you did, it was really nice. Now, these trades are the biggest trades you're going to take probably in your career, most likely because you are already going with the prevailing trend. We're not worrying about a trend becoming a trend. It already is. And you're just getting a bigger piece of it. You know, sometimes trends go for 1,000 pips, but you might have gotten stopped out at the 150 mark. Continuation trades allow you to re-enter pairs that are already trending. So you're not restricted by your own rules when it comes to getting a really big piece of these things. Let's go to a different pair and see an example that's a bit more nuanced. So we go to pound Swissy. Now this one's a little more complex. Let's see what was going on here. So we almost had a short trade. Your confirmation indicator wanted to go short, but this is your baseline doing its job. It did not allow that to happen. And there was a lot of drawdown that you would have missed out on, and that's a good thing. But let's take a look at this short right here. So you enter this short, and then your own confirmation indicator tells you to get out right here. See that? It crossed back above zero. Now, you don't have the luxury of seeing the future. So, if you're following a system, if your exit indicator didn't tell you to get out here, your own confirmation indicator flipped the other way, and that's always a sign to get out. Luckily, on the very next day, it told you to get back in. And all of this was still well under your baseline, like way under your baseline. Like you're really breaking that rule of price going, beyond the ATR of your baseline. But that was okay because you got in, and then this right here, I don't think, this should be a minus number. Yeah, negative number. So it never crossed back above. And you got to enter here and ride it all the way down again. Really nice. Now, at any point in this little journey, if any of these candles just went wild and crossed above this baseline, deal's off. You don't get to make confirmation trades anymore until that whole thing resets. And that's fine. You have so many other pairs to trade, who cares? But that's the rule. Everything stayed below the line like it should have, and so we had a really nice confirmation trade, which is good because that meant your trade here was not over at the end of this candle. That would only have been a very small gain. You got a lot more. Now, I would be willing to bet that normally your confirmation indicator, unless it also doubles as an exit indicator, is not the piece of your algorithm that gets you out of a trade first. But a lot of times in these continuation trades, they will be. So just watch out for that. That is not unusual. But I feel like if you just understand the rules it follows and the rules it breaks, this concept is fairly straightforward. But if I chose to describe this to you any earlier than right now, it might have gotten really confusing really fast. And I know both examples I gave were of price going short, but you would just flip this for longs. Same thing. You guys know all this by now. I don't need to remedialize it to you anymore. But you're going to run into these quite a bit when you're backtesting, and a lot of them are going to run for a long time, and it's going to be a lot of fun. And you're going to be glad we added this piece to the overall puzzle. So in conclusion, follow the rules and be diligent on these. It's not that many rules, but you have to follow them in order for this to work optimally. And then now you can go backtest a full algorithm. I might add little tricks or hacks or pieces that you might want to add to it later on. But at this point, for those of you that are almost finished and are really happy with what you have, you can, at this point, now, I mean, there's no way you could have done this without having this piece of the puzzle in there, and you guys are going to see why. You do not want to be without these types of trades. But now that you know what they are, and now that you know what to look for, go backtest completely, and if you need help, refer to the backtesting blog. I will link that down below. It was very complete, gave you a nice little structure to follow to where you can pay attention to the things that matter and eliminate the things that don't, and be able to get the absolute best data for your system so you can then forward test it and see if it works in real time. So fly, little bird, fly. Go do the things you need to do. I have given you enough information to go out there and destroy this market. There are other pieces, like I said, that we're going to add and fine-tune and all that. But as far as any of the pieces, you have them all. So go show this market what time it is. Now, for the rest of you, if you're not subscribed, what are you doing? Subscribe. Some of the best videos I have are around the corner. Some of the most requested videos I have are right around the corner. Subscribe, hit the bell, don't miss a thing. For the rest of you, get it all together. Now's your time. Go get it.